Welcome to a discussion on investments to hedge against inflation and recession. Let's start by defining these two terms. Inflation, simply put, is the rate at which the general level of prices for goods and services is rising. When inflation increases, every dollar you own buys a smaller percentage of a good or service. On the other hand, a recession is a period of temporary economic decline during which trade and industrial activity are reduced. It's typically recognized as 2 consecutive quarters of economic decline as measured by a country's gross domestic product or GDP. Both inflation and recession can have a profound impact on the economy at large and, more importantly, on individual wealth. They can erode the purchasing power of your money over time. But fear not, with the right investment strategy you can protect your wealth against these financial downturns. Let's delve into the realm of inflation-proof and recession-proof investments. In the financial sphere, these are investments meant to protect and even grow your wealth during periods of economic downturn or inflation. Inflation-proof investments are designed to keep pace with or outstrip inflation, ensuring that your money maintains its purchasing power. How do they work? Well, these investments are typically tied to assets that increase in value when prices rise. Real estate is a classic example. As the cost of materials and labor goes up, so does the value of properties. Another example would be commodities like gold, which often see an uptick in value during inflationary periods. On the other hand, recession-proof investments are those that tend to hold their value or even prosper when the economy is in a slump. These are usually found in sectors that provide essential goods and services, as demand for these remains steady regardless of economic conditions. Consumer staples, healthcare, and utilities are sectors that historically have shown resilience during recessions. Now let's talk about bonds. Treasury Inflation-Protected Securities, or TIPS, are a type of U.S. government bond that adjusts with inflation. The principal value of TIPS increases with inflation, providing a fixed interest rate on the adjusted principal. Hence, when you get your principal back at maturity, it will have kept pace with inflation. Similarly, certain types of stocks can be considered recession-proof. For instance, companies that produce consumer staples often perform well during recessions, as people continue to buy essential items like food and hygiene products, regardless of the economic climate. In essence, inflation-proof and recession-proof investments are all about maintaining purchasing power and minimizing risk. They provide a safety net, ensuring that your wealth does not erode during tough economic times. While they may not always deliver the highest returns, they offer something perhaps even more valuable: stability and peace of mind. Understanding these investment types is key to building an effective hedge against inflation and recession. Now let's look at high-return and low-risk investments for inflation and recession. When we talk about high-return and low-risk investments, we're referring to those that offer a balance between potential earnings and the risk of losing your initial investment. These are the kinds of investments that can provide a safe haven during periods of economic turbulence, such as inflation or recession. One such investment is in government bonds. These are essentially loans you give to the government which they promise to pay back with interest. The risk here is low because it's backed by the full faith and credit of the government. Additionally, the returns, while not astronomical, can be attractive, especially during volatile economic times. Then, there's the option of dividend-paying stocks. Companies that have a history of paying out regular dividends tend to be more stable and less volatile. These dividends can provide a steady stream of income, even if the market is experiencing a downturn. Another potential high-return, low-risk investment is real estate. While the property market can have its ups and downs, over the long term, real estate tends to appreciate in value. Plus, if you choose to rent out your property, you can also benefit from a consistent income stream. Gold is another investment that has traditionally been seen as a safe haven in times of economic uncertainty. As a tangible asset, gold holds its value well, and its price often rises when the economy is in trouble, providing a hedge against inflation. Lastly, let's not forget about the importance of diversification. By spreading your investments across a variety of asset classes, you can mitigate risk and increase the potential for returns. So, even if one investment performs poorly, the others in your portfolio can help offset the losses. These high-return and low-risk investments can offer a safe haven during economic turbulence. Whether you're a seasoned investor or just starting out, it's worth considering these options as part of your strategy to hedge against inflation and recession. Remember, the key to successful investing is to be informed, be patient, and stay the course. For beginners and retirees, investing during inflation and recession can seem daunting. But fear not. There are a variety of strategies that can help safeguard your wealth during these turbulent economic times. First, let's consider the importance of diversification. Spreading your investments across different asset classes such as stocks, bonds, real estate, and commodities can help mitigate risk. If one sector takes a hit, another may thrive, balancing out your overall portfolio. Next, let's not overlook the power of dollar-cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of the market's state. Over time, this approach can reduce the impact of short-term price fluctuations and help you build wealth in a disciplined way. For retirees, a focus on income-generating investments can be beneficial. These can include dividend-paying stocks, bonds, or real estate investment trusts. The income from these investments can supplement your retirement income and help keep pace with inflation. Another strategy to consider is investing in inflation-protected securities. These are bonds that adjust their interest payments based on inflation rates, ensuring your investment's purchasing power remains constant over time. Lastly, consider seeking professional advice. Financial advisors can provide personalized investment strategies tailored to your unique situation and goals. They can help navigate the complexities of investing during inflation and recession, guiding you towards a more secure financial future. Remember, investing is not a sprint, but a marathon. It's about creating a long-term strategy that can weather economic ups and downs. It's about patience, discipline, and making informed decisions. Whether you're new to investing or in your golden years, it's never too late to start protecting your wealth from inflation and recession. By understanding the market and employing smart investment strategies, you can help ensure your financial stability and peace of mind. No matter your experience level, there are investment strategies to help you hedge against inflation and recession. We've covered a lot today on investments to hedge against inflation and recession. As we wrap up this informative journey, let's take a moment to revisit some of the key insights we've gleaned. We started by understanding the importance of inflation-proof and recession-proof investments. Remember, these aren't just buzzwords. They're strategic decisions that can help safeguard your wealth during turbulent economic times. From commodities like gold and silver to Treasury Inflation-Protected Securities, there's a range of options that can help shield your portfolio from the financial storm. We then delved into the world of high-return and low-risk investments. It's not an easy balance to strike, but with the right strategy and a diverse portfolio, it's certainly achievable. Real estate, for instance, provides a tangible asset that tends to appreciate over time, offering a high return while mitigating risk. Then there's the stock market, where investing in solid blue-chip companies can reap attractive dividends. And let's not forget about our beginners and retirees. If you're just starting on your investment journey, don't be intimidated by the world of finance. There are simple, easy-to-understand investment options out there for you, like index funds and bonds. As for our retirees, remember, it's never too late to safeguard your nest egg. Consider investing in reliable income-generating assets like dividend stocks or annuities. In sum, navigating the investment landscape during periods of inflation and recession may seem daunting, but it doesn't have to be. With the right knowledge and strategies, you can secure your financial future and continue to grow your wealth, regardless of the economic climate. Remember, with the right investment strategy, you can protect your wealth against inflation and recession. This presentation is brought to you by Higgins Capital.